Hello again, everybody. This is Matador from freetradingvideos.com. It's still Cinco de Mayo, and we are looking at a nice little gap fill right after the small gap down we saw this morning. So I want to look at this S&P 500 again with you guys and gals and sort of just take that apart. So here's that gap. All right, we saw that. It filled beautifully, ran up to the next logical place of resistance on this chart, which was the previous swing high in that case. Made a lower swing low, but it was still higher than that nice base that formed toward the end of the day, right? Another run up, and still an equal swing high in here, but now the majority of those charts, candlesticks, excuse me, were sort of a little bit lower. So I would consider that in some ways a lower swing high, and we consolidated into a symmetrical triangle, which kind of failed. We got that bit of a run there, made it a swing low as I walked through this chart to the next logical place of support, which to my eye was a number that was already drawn in here. And we got a really nice bounce actually right back up to the apex of this triangle. So if you draw this symmetrical triangle, this is a nice no-brainer here. There's that guy. Other people might draw it in this fashion, but it failed right through here. And to me, to my eye, this is exactly where it has run back up now and become resistance. Failed the 50 MA again, just a little 5-minute or a 3-minute chart here. This whole area in here would become resistance to my eye. Anywhere from here all the way down to where it really started selling off. And so it's not unbelievable that it would come back up to this and have trouble with this area. What's great though is if you look at this in context with where we are, where we were, let's go deeper now. So here is the trend. Right, so the trend has been rising all day long, but still well below even 0.8. Right, so that's very nicely bullish. When the trend is this low, it doesn't keep up that pace very long, and that's a great indicator that the market's in need of a rest, which is what we saw here. The TRINQ actually did the same sort of thing, but popped up above 0.8 and even ran above 1.0 in the 1.1 range for a while. So here is a nice sell-off in the trend, which is interesting because right around that same time, the markets were coming back, right? So there you go. The tick has spent about equal part of the day below and above 1. Again, you can 0, and now you can see in here that the move down was corroborated by the tick now. Move back up above 0. So the VIX is often a good tiebreaker for all of this, and what I see now is almost the exact inverse. Here's a lower swing high, or a lower swing high in the broad markets, higher swing low in the VIX. Failed this level of support, this level of resistance then, and the VIX was broken at the same time. And now we're running back up, making a lower swing high in the broad markets, higher swing low in the VIX. So what I would need to see before I go long in anything that's not experiencing relative strength right now today is the VIX to sell off here, to fall down below these levels of support, as further confirmation for my trades, at least if I'm going long. If I'm going short, I want to see relative weakness stocks fail even before the VIX rises concomitantly. So this is what I need to see in the broad markets. Back to the S&P 500, there's a great reason why we stalled up in this region. And if you remember yesterday, talking about what happened back in here, if you drop a line in around this 91 area, which is where the stock ran up to yesterday and failed, kind of go back in time, you'll see that this resistance has been in effect for quite some time. Here was that sell-off after this sort of ascending triangle failure, and that's what we ran up into yesterday. Ultimately broke through it, ran higher. If I was going to fine-tune this line, I would drop it right here, but the round number of 91 got in the way before this exact number. There's another gap back in here which we'll watch out for. This spans from 92 up to 93. So it's a really nice 1-point difference in here, and so that's going to be a great resistance on the way back up. So we'll see if we can chew our way through that, or if the profit taking is going to be too powerful and we get a rollover here. Again, either one wouldn't be that surprising. Again, remember that weekly chart and realize how much overhead resistance we had to fight through. 50 MA's coming, century marks coming, a lot of things overhead to watch out for. Not that we can't do it, just be careful how you go along in here, everybody. So great being with you again. Had a great day yesterday. Hope you did as well, and I'll be talking to you soon. Thanks.